China just made a move that could end the dollar's rule, and most people have no clue it's already happening. What if I told you that right now, as we speak, China is secretly buying more gold than ever before in history? And this isn't about gold prices going up, this is about the death of a financial system that's ruled the world since World War II. China is literally rewiring how money works, and when you understand what I'm about to show you, you'll realize why your portfolio might be completely unprepared for what's coming. Here's what's insane. The People's Bank of China has been adding tons of gold to its reserves every single month since 2022. They are dumping US Treasury bonds down from 1.3 trillion to just 770 billion just to buy more gold. But why? Because they discovered something that could end the dollar's reign forever. And get this, they have launched their own oil exchange where countries can trade in yuan, not dollars. The system that made America the world's financial superpower, it's cracking. And your money is sitting right in the middle of this earthquake. Think of it like this. Imagine if tomorrow your local grocery shop stopped accepting rupees and only took gold coins. Sounds crazy, right? But that's exactly what's happening on global scale. China isn't buying gold for fun, they're building a financial weapon. Since 2022, they've been on the biggest gold buying spree we have ever seen. The official data shows massive purchases, but here's where it gets sneaky. Experts believe the real amount could be much higher because China also buys through state-owned banks and through Hong Kong completely off the books. By the way, I'm Nikhil. I'm a chartered accountant by profession with nearly 2 decades of experience with EY, PwC and one of India's top wealth management firm before launching my own startup. And this is FinNiki, where I simplify money the same way I practice it. Now, let me tell you why this matters to every single of us. See, in 2013, China held over 1.3 trillion in US Treasury bonds. Today, around 770 billion. They are literally trading paper promises for solid metal, and here's a brilliant decade-long strategy behind it. Remember when as a kid you played Monopoly? The person with all the properties usually won, right? Well, for decades, America owned the monopoly board of global finance. But China just realized something. Why play on someone else's board when you can build your own? For this, let me take you back to the Bretton Woods Agreement after World War II. This agreement created the World Bank and the IMF, but more importantly, it made the US dollar the world's reserve currency, backed by gold at $35 per ounce. It was like making the dollar the WhatsApp of money. Everyone had to use it to talk to each other. But here's where it gets wild. In 1971, President Richard Nixon did something shocking. He ended that system completely. The dollar was no longer backed by gold. It became what we called as fiat currency, valuable only because of trust. Imagine if WhatsApp suddenly said messages are valuable just because they say so. Sounds ridiculous, right? But America pulled it off with one genius move. In the 1970s, America made a pact with Saudi Arabia that changed everything. The deal was simple but powerful. Oil will be sold only in dollars, and that's how the petrodollar system began. Since oil is the backbone of global economy and everyone needs it, like we need oxygen, everyone needed dollars. It was brilliant, like creating a toll booth on the only highway in the world. If you're finding this useful, just hit the like button and subscribe. It's a small thing for you, but it really helps me know that you're enjoying this kind of content and keeps me motivated to make more such video for you. Because what I'm going to reveal about China's master plan will blow your mind. So China, being the world's largest importer of oil, looked at the system and thought, wait a minute, why should we pay this toll forever? They launched the Shanghai Petroleum and Natural Gas Exchange. Sounds boring, right? Wrong. This is where oil can be traded in yuan, not dollars. But here's the genius part, and this is what nobody's talking about, that yuan can be converted into gold through the Shanghai Gold Exchange. Think of it like this. If someone offered you payment either in paper promises or actual gold, what would you choose? That's exactly the choice China is giving to oil exporters. And countries under US sanction or tired of dollar dependence like Russia, Iran, and even some of the African nations are already jumping on board. Now this is where the BRICS come in. Brazil, Russia, India, China, South Africa, plus the latest additions. By backing the currency with something tangible like gold, China is building credibility within this alliance. They are showing other developing countries that trade and reserves can be built on real assets, not just on US dollar. But why all of this now? Why is China moving so fast? Here's the trigger. When Russia's assets were frozen after the Ukraine war, it was a massive wake-up call. China watched this and realized if this can happen to Russia, it can happen to us. Imagine keeping your life savings in a bank and one day the bank says, sorry, we don't agree with your actions, so you can't touch your money. That's essentially what happened. And that's the moment China started accelerating this move, buying gold, trading in local currencies, and slowly preparing for a post-dollar world. So why gold specifically? The answer is very simple. Gold has always been the ultimate form of money. It doesn't rely on any government or central bank. It holds value across centuries, and in times of uncertainty, it shines. And right now, the world is uncertain. Trade wars, sanctions, inflation, currency volatility, all these makes dollar look less stable. For China, holding too many dollars means maintaining dependency on the US financial system, and that's very risky. Instead, they're loading up on gold, something the US cannot freeze, sanction, or manipulate. Gold gives China an alternative form of strength, one that doesn't depend on America's goodwill. It's both practical and symbolic. So what happens if this continues? Let me paint a picture for you. If more countries trade using yuan or gold instead of dollars, the demand for dollar will gradually fall. And when demand for dollar drops, its value starts weakening. Think of dollar like a popular restaurant. Right now, everyone wants to eat there. But if people start going to other restaurants, something has to change. A weaker dollar means America has to offer higher interest rate to attract buyers for its bonds. It's like surge pricing. When fewer people want something, you have to sweeten the deal. That means borrowing cost in the US goes up, and this affects everything from government loans to credit cards and mortgages. When the world's largest economy feels that pinch, global markets feel it too. As the dollar weakens, gold naturally strengthens. Investors move towards safer assets, and gold, being the oldest store of value, directly benefits. That's one reason why gold prices have been hitting record highs lately. Every time there's a headline about de-dollarization, global investors quietly shift a little more into gold. And interestingly, Bitcoin has also started reacting to this trend. It often seen as digital gold, and when trust in traditional currencies weakens, speculative money flows into crypto. So while gold represents the old safe haven, Bitcoin represents the new age one, both thriving when confidence in dollar drops. This signals a larger trend. The world is slowly moving from paper-based trust to asset-based trust, where tangible or limited supply assets like gold or Bitcoin gain importance. Now, this doesn't mean that dollar will collapse tomorrow. The dollar is still deeply embedded in global trade, debt, and reserves, but it does not mean its unchallenged supremacy is over. And we are entering a world where multiple forces from gold to crypto are reshaping what global money really means. If all of this global reshuffling happens, what does it mean for us here in India? First, if the dollar weakens over time, capital starts moving out of the US and into emerging markets like India. Why? Because investors start looking for better returns and growth opportunities. That inflow of money can help strengthen rupee and even stabilize domestic interest rate. India won't need to keep raising interest rates just to protect against a strong dollar. A softer dollar can make borrowing cheaper and imports less expensive for India. But here's the flip side. India, being one of the world's largest consumer of gold, will feel price increase directly. Every time global investors lose confidence in dollar, gold prices in rupee shoots up. That's great if you already hold gold, but not so great if you are planning to buy more later. And then there is Bitcoin. Even though still volatile, Bitcoin tends to rise when people look for alternatives to traditional money. If de-dollarization keeps building momentum, crypto assets may start finding a bigger place in diversified global portfolios, though with much higher risk compared to gold. So what does this mean, and what should you actually do? Here's my framework. Just like China is diversifying away from the dollar, you shouldn't rely on a single asset class. Think of your portfolio like a thali. You need a balance. Keep your long-term investments in equities, but hedge a small portion in gold through ETFs, digital gold, or even sovereign gold bonds. And if you understand the risk, maybe a tiny slice in crypto as well. The world is entering a phase where real assets could play a bigger role than ever before. We are actually witnessing financial system evolve in real time, and it's one of those rare moments when global economics actually connects directly to your personal portfolio. You see how a single move by China could be the spark that reshapes the global financial system? For decades, the US dollar has been the backbone of world trade. But now, countries are questioning if one nation's currency should decide the fate of every other economy. Whether it's China buying record amount of gold, BRICS pushing for an alternative trading system, or investors shifting to real assets, the world is clearly preparing for a post-dollar era. And that means sooner or later, every country and every investor will have to adapt. As India grows stronger in the new world order, the smartest thing we can do is to stay informed, diversify, and think long term, because money, power, and trust are being rewritten in real time. This is a really important and an interesting topic, and I had fun working on this subject. I hope you liked it too. Let me know your thoughts in the comments and ask yourself, when the next global currency system is born, will you be watching it happen, or will you already be invested in it? That's it from me. I'm Nikhil Verghese. Share this video and subscribe below to learn how to make your finances less tricky with FinNiki.